Hi everyone, delonewolf here and welcome back to EVE Talk, your weekly look at the market in EVE Online. When it comes to news, well, we saw a dev blog on the audio changes. That was definitely pretty interesting, and it does feel like that would be a major improvement in bigger battles. Definitely worth a look. In fact, I was in a mass test to test that type of stuff, and I must say it did feel pretty responsive, especially on camera movements, without ever really getting that mass crackling or anything like that. So that does look good. And on that front, there is also a mass test next week on Tuesday, 1700 EVE time. If you want to help test the game, I'll definitely try to be there. Again, it's always a bit of a try at the moment, considering real life work, but with a bit of luck, that should not be a problem. Other than that, mostly, again, I'm still waiting on some more details on what's going to happen with the expansion, the faction warfare update. But of course, I do think that for non-faction warfare players at the moment, it will be relatively limited. Still, that doesn't mean that we can't get some preparations done towards and hopefully getting the allegiance system later down the line. Another bit of news that I should probably mention here as well, we'll take a look at it on the market impact in just a moment, but there should be a plex sale, so let's go take a look at the new Eden store, or there was, I'm not sure how long it is. No, there we go, 40% off on 1 month Omega, so you only need 300 plex for a month of Omega, but as you can imagine, that will have its impact on the price of plex itself. That was already in pretty low supply and at very high prices. On the summer slump as well, and of course with the change to real life prices for plex, for subscriptions, all of that has really exacerbated the problem, and we're now looking at very expensive plex. And well, some perhaps tinfoil hat theories, but perhaps it's also just the truth, is that CCP must have known the impact of a sale like this on the plex market, but that this is actually all about getting more people on the books as being subscribed for the end of the quarter, which ends by the end of the month, of course. So it's a possibility. Honestly, it does feel like, you know, if you want to look for lower plex prices, you should probably not do this. If you're looking to liquidate a lot of plex from the game and get those well, that server time basically off the books, then this is the way to go. But it is a 40% off. That does mean that if you have a lot of plex lying around and you do want to, efficiently get Omega going, then it's only 300 plex for 1 month of Omega at the moment. I think you can do that as much as you want. I'm not sure. Let me know in the comments if that's right or wrong. But for instance, if you have 6 times 300 disk, you can get 6 months of Omega on the books. I believe that's how it works. Then we've got some Mars skins that are on sale. I believe that there are also some Mars celebrations that will be starting or have started. 20% off. Some of these do look very cool. The Imperium Jubilee skin, Damnation, amazing looking ship, for instance. Real like Paladin as well. Harbinger. There's the Redeemer one. Very cool. So some Mars skins on sale as well. And let's see, so for the services, it's really the 1 month Omega, 300 plex. Pretty good deal. I, of course, have some plex, but since my Omega is paid for by CCP and I don't want to, I like to keep them in reserve. We'll see how things play out. But yeah, it's that's the situation. So let's dive in. Let's go to the market. We start with pilot services, coming in at 410. Like that, and of course we take a look at the plex chart first of all, and so you can see here that we have a very strange data point above 5 million on all of a sudden today. So this is happening basically right now. There's definitely a lot of maybe plex discovery, price discovery that's happening as well, and maybe there's a little bit of screenshot manipulation as well, because I saw someone post a screenshot where it was like 7 million for the sellers of plex. I'm not sure if that was ever actually the case, but volumes not even all that high, but the day might just be early as well. We are talking about, let's take a look at that, 5.5 million was actually the cheapest plex when I made the ticker, and that's like 10 minutes ago or something like that. So we do have a little bit of selling happening below that 5.5 million in batches of 500. Pretty smart, I think. Oh no, actually I would do batches of 300 at the moment if it was me that was trying to sell for a good price, but someone is putting them up here for 500 and pushing the price down in the increments that the market allows, basically banking on perhaps more players coming online, seeing the sale, and then deciding to, they want to take advantage of this. If they're willing to push back up to that 5.5 million, which we've been at before, not even that long ago, then all of his sales will trigger, of course. And I think that this is the way that you can at least guarantee that a big part of your sell orders will trigger. And even if someone, for instance, is only willing to go up to the 548, well, all the others will have triggered instead of putting up one big batch of 5,000 plex just below 5.5. So I think that's basically one player strategy, but a bit more aggressive selling is happening down here as well. Tranquility Trading Tower right in the mix of things, so it's not like that's a completely different market from what's happening in plex there. Buyers are up to 5.1 million. Definitely feeling the pressure on that one. If someone is at the moment willing to dump plex, and you can see buy orders of 300 coming in, so they are definitely there to try and snag plex for the cheap subscription, relatively cheap subscription at this point, then they have to go well above 5 million. And there is obviously demand for that, as they have been pushed up above 5 million, which is not insignificant, of course. Let's see if there is an immediate impact on the multiple pilot training certificate. Well, I wouldn't call it immediate. Basically, it's still in the process of absorbing a previous low in the price. So we went to almost 2 billion, then we went back down to almost 1.5 billion, and we had to recover a little bit from that. We're basically back above 175 at the moment, but the trajectory for the 5-day moving average is obviously up, and there it is, 1.86 million now for the sellers. So there is definitely some upwards pressure, with buyers forced up to 174, basically 175 million as well. Next week, we're not sure exactly, of course, how long the sale and things like that will happen. We should be, we're in all likelihood going to bump up into that 2 million again, and then we might be going down. Could be a double top forming, which after that, if CCP then holds off on any more interactions with the market, other sales and things like that, it is possible that we will go down in price, but in order to go down in price, you do need supply as well, which is at a higher real life cost. So it's not going to be easy to see like massive reductions in the price at the moment, I would say, especially with everything that's potentially being drained out of the game at the moment. Skill extractors should see a crazy chart as well. Yeah, you can see that basically the minimum price has stuck to the early transaction, and then we just shoot up to the maximum price. So we were already above 500 million couple of days ago, 530 for the average price. It's 620 to 650 to 675 and then 725 million for the skill extractors. That's a big seller with 31 units coming in here at 620, buyers up to 541, and you can see that supply is gone, which could really become part of the problem in order to get the prices down in a sustainable way, because where is the supply of skill extractors going to come from? Well, it's gonna cost you more real life money than, let's say, 6 months ago. Impact on the injectors, I don't think this is really stoppable by these markets. Well, you get the max prices here that are definitely going up. Let's take a look at like an average price here, 860 for the large scale injector on average. We're at 880. It's not that big of an impact, but it's definitely there. 880 million now for the sellers, 823 for the buyers, so an 860 could still be the average. That's manageable at the moment for the sales, but I do think if players watch that skill extractors are basically going for 620, and then you've got large scale injectors going for 880, that feels like a good deal. So I do think that the sellers will have a good time at the moment. Small scale injectors next, also pretty flat on the chart, and the min-max price actually all over the place, so might actually be doing its own thing. 175 for the sellers and 159, so almost 160 for the buyers. That actually feels like it's a little bit of margin opened up, and you can indeed see 159, 160. These buy orders are all the way down here, which again, this is sort of like my theory that when the day isn't over, the min-max prices are determined by the orders that are put up. And so like it's like a potential min-max for the day or something like that might be showing up here. Very interesting. Big spread and actually downward pressure on the buyers here. Might be that they're running out of ISK as well at this point. We still have the daily alpha injectors then that are finally seeing a little bit of downwards pressure here as well, as we touched 70 million on a couple of occasions. We're down to 67 for the sellers, but still 62 for the buyers. Does indicate pretty strong demand for these daily alpha injectors. They are willing to go above 60 million, which is of course quite a bit more expensive than again 6 months ago, when 40-45 million would usually get you a daily alpha injector. Finally, we've got the hypercores that are also trending up. You can see those max prices and today's average up well above 500,000, when before that was like a trigger to pull back a little bit for the market. We're at 583 for the sellers, 490 for the buyers, so they are probably going to be willing to ride this one out for the hypercores. Next up, we have the mineral market. That's coming in at 1120. There we go. As always, we start with titanium, which has a crazy min-max price. I'm actually going to take a look here. So within GDA, we don't see anything crazy, but maybe it has something to do then with more regional prices or something like that. I'm not sure, because now my theory for we should then see someone trying to sell at like 12 or something, not happening, I don't think. Anyways, 392 for the sellers, 386 for the buyers. Very narrow margin, and actually unfortunately we lost the 4 ISK, which was really great to see last week. Increased demand and quite a bit of buying, I think, all of a sudden did manage to push us up above 4, which was very good news for HiSec miners that had some titanium lying around. But it looks like that's actually quite a few people, because you can see those volumes here above 4 ISK. Someone came in and really put in, you can see from these numbers, right, 200, 100 million. That's probably the same person that again tried that selling into a price range rather than just putting up 2 billion at one price, but going in batches of 200 and 100 million. 0.01 on all of them, down from like 420, but deciding to start at like 411 already at a pretty steep discount, and then just going all the way down to 4 ISK here. Quite a few sell orders, and unfortunately for that person, there's even more people with reserves that are probably just willing to go even below 4 on ISK, or this could be sell orders from that same batch here that are getting slowly nibbled at as the market bumps into those big sell orders. But you can see that prices above 4 ISK have mobilized a lot of titanium to the market all of a sudden, so that wasn't very sustainable. A little bit as expected, but still a 390 compared to where we've been for most of the last few months is not a bad price for HiSec miners. Let's see what pyrite looks like then. This one kind of the same story, went up above 10 ISK, which we haven't seen that in the last 4 or 5 months at least, and a nice little sell opportunity, which again will have mobilized supplies, and we are down to 920 for the sellers, 904 for the buyers though, so you can see there are buyers for HiSec minerals out there in the market, but again big batches, 70 million, 300 million, 260 million, trying to take advantage of these higher prices. And then here another one that bumped us down from 990 in pretty orderly batches, so probably another player trying to, catch the descent and potentially, of course, catch another uptick of the same magnitude as before. It's a lot of units though, so it's going to be difficult to materialize another violent upswing like that. And then we got Mixalon that was also up substantially last week, and interestingly enough seems to be able to hold on to a nice little amount of extra ISK for those high-sec miners. We touched 87.5 here on the chart pretty much for the 5-day moving average. Obviously some supplies come online and we lose a little bit of ground on that, but if we're still above 75, that's pretty nice. And within JITA we are, I should actually do that, 78 for the sellers and 73 for the buyers. 100 million here. Couple of mobilizations of 20s of millions of Mixalon, but pretty actually decently absorbable by the market, and another sell batch, a big sell batch here at 80 of probably multiple players. I think you would 0.1 most of these, like this type of stuff. So there is supplies that came in, but it looks like it's really not enough to fully turn around this market and bring us back into the previous range. So we're basically still close to a 1-year high point for Mixalon above 75 ISK. Pretty good news for high-sec miners. Obviously, I think for this week, if you want to be mining here, you know what to focus on. Try to grab some of that Mixalon. Any impact then on our Isogen that did make its way above 400 ISK or close to 400 ISK last week? Well, unfortunately, for those looking for even higher prices, which I'm kind of part of that, I would love to see Isogen be able to break out above 400, but it just doesn't, right? You get the same thing. We touch 400 ISK, which brings out supplies, reserves, and things like that. We're down to 376, 77 for the sellers, 356 for the buyers. And well, it's not that much. It does feel like we could potentially, for instance, hit back towards a 390 pretty easily, right? These volumes, I mean, there's a couple of big ones, 25, 16, 17 million units, but this is doable on a big buying spree. An alliance grabbing a decent chunk of Isogen, we should pretty easily be able to bump into the 390s. But then, of course, you get 100 million here. That's well, that's really all that's stopping us from getting well above 400. So honestly, it's pretty interesting. I think in general last week everyone was in a bit of a hurrah mode when that much buying took place all of a sudden, which pushed the prices up. But then those that are lying in wait to sell at better prices are coming out of the woodworks as well. But as we get from the very ubiquitous titanium to more rare minerals such as this Isogen here, it's not that much anymore. It's not like billions and billions of units are trying to be sold at 400 ISK. So I do think on a little bit more need in the market that Isogen could get that push well above 400 all of a sudden. For Noxium, we've got the recovery as we went below 750. I think here slightly different story, as below 750 was seen as a buy opportunity by the market, and it basically pushed us back towards that average for the whole month of August, which is not a great average for Noxium. 824 for the sellers, 760 for the buyers, and here you can see the impact of those low prices. Well, supplies are not that much for Noxium. So sort of the same story. If you need enough Noxium, maybe for the new ships, maybe with players coming back, maybe something happening in nullsec, maybe for some of those faction warfare propaganda towers or stuff like that perhaps needs to be deployed in order to give your side aid and things like that. Any increased need for Noxium now, as we for Noxium, could really bring higher prices back, and so it's sort of the same story. You've got a little bit more inertia in the more common minerals, especially the high-sec mined ones that have pretty decent reserves and active supplies slogging around into the game, stabilizing those markets. And while Isogen is actually still pretty high on the chart and Noxium is pretty low on the chart, both of these don't have huge supplies to keep that price in check. So I would be careful in thinking that these are the best prices you can get for Isogen and Noxium. And then moving on to nullsec, finally, we've got a crazy min-max price that's really playing havoc with the chart, but we are back above 2000 ISK here, so very expensive. Perhaps also like a little bit of a delayed impact of everything that happened with the buying of minerals last week, and that we now get this to roll into, well, we also need Zydrine, we also need Megasite, and so we can't sell as much maybe, can't export as much maybe, and so these prices are back to 2,384, so well above 2,300 disc for the sellers, and buyers just below 2,000 disc, trying to ride out this wave as well. And then for Megasite we get a slightly better chart. It's still not great, slight uptick, but this one is a little bit more reasonable, 1,600 for the sellers and 1,540 for the buyers, and right away you can see how that margin has narrowed between sellers and buyers, which is a little bit more what you would expect in a stable situation, a market situation for these. So for Zydrine, definitely a sharp move. That means that there is instability perhaps in the supplies of these minerals. Finally, we've got Morphite flat above 40,000 disc, so 43 for the sellers and 40,000 for the buyers. Basically very, very stable over the last 6 months, with the consensus that it's around 40k for Morphite. Next up, we have the PI market coming in at 2030. There we go. Well, now I'm kind of curious. This should be a lot of ISK flowing into pilot services at the moment. We saw that a lot of ISK flowed into minerals that has increased supplies, at least up to a certain degree. What is happening in all of these PI materials that have actually had, like, a surprise, to me at least, surprisingly strong summer? And as someone mentioned, that perhaps what's happening here as well is just the lower player activity, where players just even give up on their PI alts. Now, I'll be honest, I would say that that would be a very bad sign for the game, because that's as passive as it gets, and it's actually, especially at the current prices, a decent way of maybe like partially funding your plexing of the account, or you know, creating stuff into the game in a pretty steady flow. If people start to give up on their PI accounts, which I think a lot of players, and I even thought about, I never did it. I'm a one character player kind of guy. All I really have is a second character that I can use, that can just get a cloaky frigate into a wormhole, so that I can always probe an entrance exit if I would want to live there. That's the kind of alt that I have. And then I've got delonewolf himself, my starting character. That's now my Jida Evetalk character. But I really thought about putting the skill points for PI into my other characters and just getting all of these characters set up with PI. It would be 3 times what I'm making at the moment, and I think a lot of players do work like that. You've got those 3 character slots, why not use them, pump the PI in, and as long as your account is Omega, you're good to go. You can have basically 3 times the amount of PI from a single character. Takes maybe a little bit more doing with the logistics of that, but it's a finite batch of skill points that you need. It's very doable, and there you go, you get twice the output all of a sudden from a single account. So I think a lot of players do have that type of a setup, and if they start to give up on the game, that would not be a good sign in my opinion. But let's get started. Here are the broadcast nodes. Maybe supplies are increasing again. Well, for broadcast nodes, at least we're not at a 1-year high point, but we're pretty close. 1.74 million for the sellers and almost 1.7 million for the buyers, which, I mean, from the last couple of weeks, I am getting the idea that these high prices are actually demand driven, that it's the construction of large ships, and with the Siege Green update, right, the ability to more easily now create dreadnoughts, create carriers, that has basically, while the need for PI per ship has decreased, in general players want to make these types of ships in nullsec at the moment, and that's why we see these high prices, because I get the feeling that supplies here, I mean, it's not great, but it's there. So we're up again quite nicely, up to almost 1.75 million for the broadcast nodes. Construction blocks then coming back down to less than 10,000 ISK here. Let's take a look at that. 9.8 for the sellers, 9,000 ISK for the buyers. Pretty normal spread here. So I would say if we stabilize here, then that's all good. This is where I've always known refined PI materials to be. 10k for the sellers, 9k for the buyers, 10% margin between the two. And supply wise here, here, look at that feels pretty good, right? And so new supplies coming in to take advantage of price above 10,000. These 4 construction blocks, pretty common stuff, is definitely pretty normal. Then we've got coolants, which last week did a surprise jump to like a 1-year high point, very close to that. You can see that here, 13,000 ISK. Has to give back a little bit of ground from that, but still doing very, very nicely. 12,500 for the sellers, 11,500 for the buyers. So normal margin, this to me is an indication that we got a decently good supplied market, but there's just enough demand to push prices well above 10,000 ISK. Enriched uranium then starting to lose a little bit of ground as well, average below 10k on a couple of occasions for the week, 10,400 for the sellers, slightly stronger demand again at 9,800 for the buyers. Our integrity response drones are starting to show signs of fatigue as well, heading back towards 2.5 million in the last couple of days. We are talking about 2.6 still for the sellers and just below 2.5 million for the buyers. So to get these average prices, right, just above 2.5 million, you have to have a decent amount of transactions going to the buyers again. So it is entirely possible. I mean, only CCP has the numbers, but I'm not seeing like an implosion of supply causing the high prices in minerals, in PI so far. Mechanical parts are back above 10,000 ISK, definitely the high end of the range, 11 for the sellers, 10.5 for the buyers. Again, for me, if buyers push into those sellers, it is strong demand that is keeping these prices high at the moment. And when there's demand, usually there's going to be suppliers as well that will pop up. Miniature electronics are back above, are still pretty strong, right? 13k for the sellers, 11.3 for the buyers. So this might look like a worse margin, right? Because it's 2,000, almost 2,000 ISK on this one. Maybe a little bit of sign of some demand fatigue. It's also not that much if you browse through everything, but that's also normal when you're paying a 30% premium on that, what I would consider a reference point for refined PI materials of 10,000 ISK. Then we've got our nano factories next. Yeah, actually not doing that great. Ending the week pretty average for the last 6 months. 880 for the sellers, 840 for the buyers. Narrow margin here. That's really, yeah, again, to me a sign that there is strong demand. It's just not as good as some of the others that have really won out, like the integrity response drones with the Siege Green update. Their needs must have really changed, but it's still there. Oops, and I need to drink for just a moment. So I can keep going, and there we go. So nano factories, a little bit of pressure, but still showing pretty strong demand with only like a 40,000 margin on something that costs 800k. Our organic mortar applicator next. Just coming down from another 1-year high point, not at 1 million, but pretty nice. 850 for the sellers, 813 for the buyers, even more narrow margin. Again, I'm seeing demand in this. Recursive computing module, pretty stable here as well. 900,000 for the sellers, 827 for one buyer, 770 for the others. So a little bit more margin here between recursive computing modules and sellers and buyers. For me, a sign that maybe here we get slight oversupply. You can see decent numbers here on some of these sell orders compared to the buyers. That could be indeed not enough demand, but not a sign that like supplies is any problem. Next we've got our robotics that are starting to pull back to a more reasonable level considering the full 1-year chart. Now historically speaking, I remember robotics going for 100k, but we're at 72 for the sellers, 66,000 for the buyers. And same story, I would say here. What's the cause of this decrease in price? It's gonna be increased supply. People seeing what, 75, 80k for robotics. It's actually possible to make robotics on a single planet. So this is something that you can basically set up, fire off, and then just on a daily basis do your PI. And there we go, you are producing an item that hasn't sold for that price for a very long time. So those supplies coming in is, in my opinion, what's pushing down the price. Next we've got Rocket Fuels holding strong at 11,900, almost 12,000 disc, and here demand does feel like it might be drying up here, but it's still 10,800 for the buyers that are coming in batches of 50k. It's quite significant, but here we do see decent supplies and demand that's not that much in actual numbers of the goods. Self-harmonizing power cores holding really nicely as well. 2 million for the sellers, 2.1 million for the buyers. Pretty expensive. Smart fab units making their way back above 70,000 disc on not that much supply. So maybe some of the less traded items could see some supply problems, but I would say that's been something that we see not just with the summer slump, but that we see quite often, right? You get a way more spiky chart here with even highs in March of 90k, and it's definitely possible that this comes from like a real supply crunch all of a sudden. But still, 74,000 for the sellers, 66,000 for the buyers. It's not bad. At the moment, I would say pretty good time to sell some smart fab units. Sterile conduits are staying well above 1 million, so that's pretty good as well. 1.1 for the sellers, almost 1.1 million for the buyers. I would say again, really nice demand. Supercomputers are looking at 83k to 76,000. Definitely not bad. If you look through the list of these specialized PI materials, our synthetic oils are a bit of a volume spike that moved the price a little bit, but it gets very quickly filled back up. 8.5 for the sellers, 7.5 for the buyers. Not as good as the other refined materials, but normal 1,000 is margin, I would say. Maybe it's a little bit high still considering the lower price, but it's the price for synthetic oil. It's just a little bit less than the rest. Which, not to say it's water-cooled CPU is of course the worst in this regard. Synthetic synapses slowly creeping up even more. 98,000 now, practically 100,000 for the sellers, 96,000 for the buyers. And yeah, honestly, it is another specialized material, so 100k historically I think is the normal price, but you can see that it's not as well supplied here as our robotics that are at 71k, so perhaps there is something to some of it, that there is less supply, but I think it's quite more of a not a uniform thing, but it's some of them that are starting to dry out, and so then it's not necessarily inactivity, but perhaps switching to more lucrative businesses that's giving us a breather. And here of course synthetic synapses still has that edge on everything else, the uniqueness that is tied to implant production. Then we've got same story sort of with the transcranial microcontrollers, actually starting to come down a little bit, but we're above 100,000 ISK here and still at 106 for the sellers, 98,000 for the buyers. So very good times for those that are building around implants. And then we've got our unfortunate water-cooled CPU still below 5,000 ISK. 4.5 for the first seller, just below 5k for most, 4.3 for the buyers. And then our wetware mainframes are actually climbing a little bit for the week, back at the high range for the entire year of trading. 1.7 million for the sellers, 1.6 for the buyers. So another pretty strong week for PI. And while there are some items where you can see that supply could really be a little bit of a problem, in my opinion, it's mostly in PI items that are not traded that often on the daily, and that actually quite often have a little bit of room to grow as well in price compared to most of the others. Let's see what our advanced moon materials are doing then. 33.25. So these have basically been really bad for a long time at this point, and the doubling of availability has basically just meant more supply. So let's dive right in. Crystalline carbonite still below 100 ISK. Just above that for the sellers, 96 for the buyers, and still those average prices just creeping up to 100, but this is still pretty damn bad on the 1 year chart, of course. For our Caldari, it's titanium carbide. Not what you would want to see if, like me, you have a couple of investments now in advanced PI materials. Just breaking from 150, able to stay just below that range for about a month or so, and then all of a sudden a week later we're below 125. That's it, below the 120 in fact now for the sellers, 116 for the buyers. So it's still an oversupply problem here in my opinion for advanced boom materials, and we actually saw, especially in the last couple of weeks, that while we had a little bit of a breather on some of these Tech 2 ship related items or faction related items, that there was a little bit of a pause, which to me was like maybe we're forming a bottom, but the other advanced boom materials always showed that that pressure was just not non-stop. There is just too much supply for advanced boom materials at the moment for the game to absorb. Then we've got Minmatar, which is Fernite Carbide up here. That's back below 100. Sellers at 99, buyers at 95. There's the pressure, Tungsten Carbide. Below 125, did a little bit of a bounce as we got really close to 100, but still 120 for the sellers, 107 for the buyers. Those are still not great prices. Our metamaterials are next, so we've got Galente with, I always have to look a little bit, photonic metamaterials right here. That's not really sign of a bottom just yet, so last couple of weeks we went down to 6250, and that's where we are stuck, right? 6270 for the sellers, 6135 for the buyers. This again, it keeps flowing into the market in batches of 120, 300,000 units, 600,000 units. This despite the fact that we are now well below half the price of a year ago. So super low prices, and still the pressure is there. Then for Caldari, it's non-linear metamaterials. We're basically moving in a consensus price just above 10k. Well, just 11,800 for the sellers and 11,200 for the buyers, but again on the 1 year chart that's less than 50%, and still it doesn't stop, right? You can see that the supply is still quite ample for this market. Minmatar for plasmonic metamaterials, actually surprisingly good. Let me know if that's right or not, but Minmatar did have this uniqueness that the Imperium has quite often fielded a Tech 2 Minmatar ship cruiser as part of their main doctrines, and so that may be why it still holds on quite nicely to almost 12,000 for the sellers. But look at those buyers, right? 9,900 for the market. So you get one big demand source that's probably not as consistent as what would be if it was across the entire game, the meta across the entire game. And as a result here, big wide gap that's opened up that could really push those prices back down. But I do think that when we touch 10,000 discs, you see that here and here, that a big group comes in and buys it, just because they know, well, if we turn this into ships, then we are going to use them because it's part of our doctrine. Then we've got terahertz metamaterials right here. Again, that's a lot of pressure, and in fact we are very close to a 1 year low point now. 9,000 for the sellers, 8,800 for the buyers. So my investment was in photonic metamaterials, and I think I'm stuck at a loss still at the moment. I think I bought on this downturn, but I basically bought a little bit too early. We still have some other advanced boom materials, but I think the story will just continue. So here you can see fermionic condensates flattening out at the 1 year low point, the range of around 35,000 for the sellers. And there's just no sign of any let up. Ferrogel went to 1 year low point, slight little bounce on investors trying to take advantage of that, but we are just already seeing that we are slowly edging back down. Next up here we got Fullerite, same story. Now we made our way back above 500 disc for a couple of days, and then you can see that supplies are just going to crash us right back down here. 502 for the sellers, 480 for the buyers, and I think we will just start to go back down. Here again, 1 year low point, slight bump on that 20-day moving average. Heading down, nano transistors, currently in a bump as we broke 2.5, right, which is obviously another trigger where the market comes in to invest. We're back up to 2.9, 2.7, but again, by next week I think supply will just correct this again. Phenolic composites, 1 year low point, slightly better but not able to do much. Pressurized oxidizers, flat below 10,000 disk for the last couple of months. Reinforced carbon fibers, slightly different story here, obviously. As we get a recovery of over 25%, it's breaking straight through 7.5 and settling close to 10,000 disk here. But the bad news, yeah, it's already starting, so touching 10,000 disk, and then in the course of a day, couple of hours maybe, you're starting to see that we break 9,750, 9,700, 9,640. So the supplies to take advantage of this bump in price are ample and are coming in right now. Next week should be quite a reversal. Ceramic fibers again pushed back up to 300 disk as we touch 200, and then we are straightening out, and here are the supplies. Millions of units again coming in now at 293. Yeah, anyone that's holding this type of stuff wants to at the moment take advantage of these high prices very quickly, and the oversupply situation is just ubiquitous, which means that we are still in the era of very cheap Tech 2 chips. Let's take a look at those at 4030. Like that. So as always, we start with a couple of Caldari ones, really very popular ships in my opinion. Here is the Basilisk. Despite being so popular, having a decent trade volumes on a daily basis, you can see that we're basically stuck now in the 100 to 130 million range. 120 for the sellers, 106 for the buyers. And we're actually starting to lose the volatility as well. The Cerberus just moved up to 180 after we broke below 150, excuse me, after we broke below 130. So 149 for the sellers, 133 for the buyers. But this is just its trade range, and I think we'll just stop here. Supplies will start to bring us back down. Then we've got the Curse. 1, 2, 3, 4, 5th time below 130 million. So this is where we are probably gonna see a couple of buyers move in. I have been a buyer on one of these dips as well for the Curse. 123 to 114, we are on this downside. So at the moment, you know, a 115, you're easily buying the Curse below 120. That's not that difficult on this chart right now. Then we get our Damnation, slowly landing on 250 million. Yeah, same. This one is more of a chart that's tied to the advanced movements, as it's just cheaper and cheaper. Supplies are too much. This this is the supply, this is the demand for the Damnation, and it's just continuously putting pressure on the price. The Deacon had one nice bump. It is a frigate, of course, and I've mentioned that quite often, that if you were to look for those twitch trade opportunities, I would say frigates were the best place to make that bet. But what's worrying me is that a lot of these are just finding those new ranges and are losing any real volatility that's tradable. And if they all start to stabilize, like here, the command chips, it's just not moving at all anymore. That's gonna have an effect on the potential volatility for the cruisers, I think, and then this could really start to be bad news for the frigates as well, that will not have the potential here to, for instance, buy for 16-17 million and sell 25 to 30 pretty easily. That's a nice trade. Not sure if you get another opportunity, despite the fact that the Deacon at the moment is going for below 15 and you're buying close to 14 million, no demand whatsoever. So you're easily buying at the 1 year low point. But do we get that volatility again? I mean, it is frigates, and so it's relatively cheap. If you need a fleet, maybe grabbing 100 of them is not outside of the possibilities for some of the larger groups. But why would they do so with all the new stuff on the horizon as well? So still a little bit risky, but if you want to do that, yeah, look at the Deacon right now. you're buying. And then if you get another spike that's even close to this, you've got a nice trade. But yeah, Eagle, again, lowering and lowering of volatility, settling at a 130 to 115 range, something like that. EOS, command ship, look at that, just no spikes, nothing in the tank anymore. 230 to 223. I actually have an EOS that I bought at like 254. I think I was already super happy, cheapest price in a very long time. But you know, it just keeps seeing pressure, and now it also sees less and less volumes, less and less volatility. Aries, right? Interdictor, it's just a destroyer, and yet the volatility is just completely gone. 32 to 23 million. That's actually a pretty damn big spread. Very difficult as well to get the buy order to trigger, but you can definitely, right, push into that a little bit. 25, 26, you're probably easily grabbing a ship on that. Flycatcher, a little bit of a bump, a little bit more popular as well. Amazing ship, Caldari, shields, lots of missiles. Super fast, super cool as well. So this one had a little bit of a bump, so it could have bought below 40. Still selling at 46. There's almost a trade in that, but buyers, look at that, 36 million just opened up a huge gap that's going to start to be filled quickly. Then we get the Guardian, went to below 100 million, so 1 year low point. Again, investment volumes coming in, but very, very carefully. 117 to 100 million, so they're not really willing to go crazy. Heretic made its way back to 40 million ISK, but super slowly, not exactly trade worthy in my opinion. And yeah, this is what I'm most afraid of at the moment for the Tech 2 market. You can see here the Hound is just starting to bump up around that, above that 15 million, with from time to time minimum prices that go below that. But you know, on this chart right here, on this downtrend, yeah, you can jump in at 15 and hope that we can sort of make it back to 20, which it did twice. But on a chart like this, where you basically have settled on a new range that's only 15 to 17.5 million, there is a chance that it's just gone, that there is no more potential for a breakout like that, especially when you get definitely a lot of ships, and it takes a lot to bring it back to that 20 million again. So this is 17 million to 15 million, too narrow margin. Yeah, not great. Ikitursa, close to 1 year low point, I think. 460 to 425, cheap, relatively cheap Tech 2 Triglavian cruisers at the moment. Same story here for the Ishtar. It just, you know, goes back below 130 million. It's probably gonna attract at least a couple of buyers, but it's just gonna be less and less, and you can see how it's really struggling to build anything of higher prices. 121 to 113. Next here we've got the Kirin, yeah, below 20, not yet at a 1 year high point. Buyers are at 13. What is that? Felt like it was in a different range, but I think it was because the scales were not that good. But yeah, we're talking 14 million for the sale. Look at that margin. Look at those volumes. I would only move in if we break the 10 million or something like that on the buyers, to be honest. Then we've got our Manticore. Then also again, you can see slight uptick here, but it's a new range. Around that 15, a little bit below, a little bit above that, but in my opinion, oh, I was still on the wrong chart. So in my opinion, again, it's gonna be very difficult to make a trade happen. I would be back in the wait for a 1 year low point mentality for that. And then the Manticore is gonna bump into the 15 million, but again, not willing to go to 20 or 22.5 or anything like that. Just 17.5. Yeah, we're happy. Bring them on. 18 million. Plenty of supplies coming in. 16 million for the buyers. Narrow margin. All volatility is being drained from these markets, I'm afraid. Nemesis 14 to to 14 million, so that's just gone as well. Nighthawk is here, just back down from 300 million, so had a little bit of a nice bump as we broke 250, so pronounced 1 year low point. Some investors come in, bring us back to 300 million. Pressure is back. We're basically in that phase. For the Oneros, we're still below 100 million. 105 though for the sellers, 87 million for the buyers, and yeah, average price is below 100. So even in this situation, buyers are picking up the Oneros. We've got the Purifier. Look at those max prices, just take a nosedive, and then we stabilize around 15. We get the Rook, a little bit of a nice spike on this one, went up to 200 million very quickly, back down to the range. And so can we do this again? I'm afraid that's going to be tricky. 131 to 109. Here is the Saber. Yeah, not much to say. 1 year low point, bit of an investment bump, very, very shallow and quickly stabilized. Scalpel, stable above 10 million. Scimitar, at least it's above 100 million for this logistics cruiser, 113 to 105. Sleipnir, super stable, found its range, 250, that's it. We are basically pinned down on that. Vagabond, same story, just below 150, that is it. And then the Zarmast continuing the decline as well, of in general Tech 2 becoming too available, too cheap for any better prices than 360 for the sellers, 325 for the buyers. So I would still say your best chance for volatility is in the smaller ships, because a stealth bomber fleet purchase or something like that can move the needle here, but it's just less and less likely at the moment to happen. I think basically those big purchases have been done, and at the moment a lot of ETH is willing to wait it all out. Next up, the Tech 3 ships, and I don't think that'll be good news either if you're looking for better price or volatility. 50-30 for Tech 3. Let's take a look at that. Here is the Confessor. First of all, yeah, just slow pressure, volumes, nothing. We're back below 50. We're at 48 for the sellers, but 45 for the buyers, so very narrow margin. Unfortunately 1, 2, 3 in these sell orders, and look at that, just 2 sell orders in the last 24 hours, 10 ships. And unfortunately, I have to say, for this market, this is probably ample supplies. This is actually plenty to keep us right here and very stable at the current price. Then we get the Hecate, same story, starting to give way to go below 50 million, which is still actually pretty expensive. 50 to 47 million, and again last 24 hours we get a couple more sell orders. It is more expensive than the Confessor, that's quite normal. We get 1 of 22, but even these 1, 3s and 5s, even take this one out and we probably have the exact same chart. Jackdaw, same story, slow trend down, 50 million and below at the moment, just below 50 to 46.5, so that's not really a tradable margin. And again, look at all it takes to bring that price down slowly, and yet to not really move anywhere. 1, 1, 1, 3, 1, 2. It's really bad. That just 10 ships slowly brought in is just gonna slowly push us down a little bit, narrowing the margin between sellers and buyers. But basically I think bumping into what's the cost of producing a Jackdaw. Volumes are really low at the moment. So one of the biggest casualties, you could say, for the changes, especially around gas, I think, will be these tactical destroyers. Well, I mean, it's all a bit of a give and take, of course. They've just become not as interesting economically, and their market has become quite small. 47 to 43 million, and here we're really in the 1s and 2s. There's really not that much happening. A slow trickle, it is being sold from time to time, but I think it's more of a niche kind of thing of, I really like the ship, I use it for something, but it's not really a fleet doctrine or anything like that at the moment. I don't see that anyway. For the cruisers, it's slightly different. Get some more volatility, some decent volumes. It's not as bad, pronouncedly lower as the destroyer. So here's the Legion, for instance, building up another, in my opinion, close to 1 year low point, touching the 160 on the minimum prices, 173 to 162. I think unfortunately we're just too late. We'll start to be pulling back up, but just like with Tech 2, The problem could be that volatility has slowly been going down. Next here we've got the Loki. That's a little bit better in how much volatility we get. So about last week we went well below 180 for the buyers, and we're at 188 now for the sellers, 167 still for the buyers. So buyers are very careful, trying to keep the prices low, so a big breakout is difficult, but I think the market is small enough and that there is interest in Tech 3 cruisers from doctrine perspective, maybe even doing other stuff, that this one still has that potential for a little bit of volatility. Proteus back under pressure, back below 180 as well, 177 to 165. And finally the Tengu, that didn't move on the average price, but you can also see that we are at a pronounced 1 year low point, 172 and 161 for the buyers. Looking at this chart, if you were looking to risk something, I would say a Tengu, of course, from the buy orders looks pretty damn nice. But yeah, Tech 3 in general definitely not having the best time, but most of the trade losses have clearly been in the destroyers. And then finally we've got the extra product for the week, and we're gonna take a look at the faction cruisers. That's coming in at 55 minutes. Like that. Especially interested as well in what some of the Navy faction cruisers are doing at the moment. But let's get started with the pirate factions as always, which I think have been very expensive and are still very expensive. That again is not good news for those tactical destroyers, as this tends to require more gas again. So here the downward trend could just slowly stop, I think. We'll see if I'm right on that, if it's uniform across the board. But my read is that especially in high priced pirate faction times, they demand a lot of gas because you can take advantage of that, but all it really does is push up the production cost of the destroyers, and thus that price just slowly goes up on the terrible volumes that we're having now. So yeah, the Ashimu close to 1 year high point, going for 190 million, buyers at 163, supply is just gone. So Cinnabal is holding on to a less than average price. That's actually okay, 243 to 220. Then we've got the Ortrus next, that's slightly higher, but this is nowhere near what we had at the beginning of the year, and actually seeing a little bit of pressure coming back down as we touched 400 million. We're back down to 380 for the sellers and 337 for the buyers. Actually a decent gap there. Phantasm, very bad chart for some reason, but that's actually pretty low, below 250. I mean low, it's still 250 million for a pirate faction cruiser. Compare that to the 120, 130 million for the Ishtar. Kind of crazy, but yeah, 248 to 231. But on the chart, this is actually not that expensive. Then we've got the Stradios, could be a pretty good gauge, but yeah, just it's above 300. It's already coming back down from that, 304 to 286. We've got the Gila. That touched the 250, so touched the 1 year low point, made its way back to 280, but that's still quite reasonable, 278 to 252. And finally the Vigilant, a little bit of a bump on this one, 10 traded a day, currently going for 330 to 268, so a little bit of volatility, but I basically don't think that the Ashimu and the Vigilant can create that much more demand in gas to really change the situation, right? Cinnabal, Gila, Stradios, those are the ships with the bigger volumes, and the Ortrus as well, in my opinion. Amazing platform, by the way, amazing explorer. I love my Explotress, you know, that's really cool as well. So I think here, looking at it, yeah, we got an uptick on a lot of them, but the range is still very, very reasonable. I don't think this will have any real impact or visible impact on the faction destroyers, except maybe stopping the descent in price. That's the max that I would say could happen from this. If all of them had like an Ashimu chart being close to 1 year high points, then I think it would be a different story. Navy faction ships, then here is the Stormbringer, definitely a unique one, of course, being Edencom, 220 to 193, still very expensive, but on the 1 year chart actually reasonable. So I think this is okay, a little bit expensive, more expensive over the last week, but not much. Then we've got Amar. Here is the Augurer Navy issue. Landing on 50 million, so definitely feels like it's inexpensive at the moment. 52 to 46 million. Maybe we're having a good time in Amar faction warfare. We'll see what Minmatar is doing, of course. And then we've got Kaldari. That is, you can see how those max prices have come down in the last couple of months, but the minimum price is slightly up, so there is strong demand for the Caracal Navy issue, 56 to 51 million, but it's quite available. So we should see a slight reverse of that if we are talking about faction warfare LP prices being a big part of this cost. Executor Navy issue. And actually, I would say no, right? You're also seeing pressure over the last couple of months coming back down to 70 million ISK, 75 to 63 million. It is a big margin, so it's still more expensive, of course, than the Caracal Navy issue, but we don't get like a reverse trend of what we're seeing on the Caracal chart here. We're seeing, in fact, pretty much the same stuff with pressure on the max prices. Oman Navy issue definitely inexpensive at 50 million as well, and then the Osprey Navy issue sort of as well, a slow trickle down over the last 5 months, going below 60 million, now at 56 to 51 million as well. Pretty affordable, pretty inexpensive. Is Minmatar our different story? Well, again, I would say no, pretty stable, 50 to 60 million. That should show decent availability. We do have a little bit of volatility here in the Stabber fleet issue on volume, so maybe there's like a doctrine or something like that that's happening right now as well, that goes up to 75 million, but I believe that we will bring this back down and stabilize decently quickly. And then the Vexor Navy issue is actually decently expensive at the moment. 100 million, most expensive of these Navy faction cruisers, 87 million for the buyers. I think it's like a PvP brawler at the moment. So I would say that in all likeliness, there might just be a little bit more interest in general in PI in some of these Navy faction ships as well, like the Vexor Navy issue and the Stabber fleet issue. I think those are pretty strong PvP ships. Maybe we've got Proving Ground stuff or something like that that could be involved there, but the fact that most of them are actually in tandem on a downward trend for the max prices could be an indication that the amount of loyalty points is actually up in general. There is just more of it out there that is pushing prices down a little bit, and that would be entirely consistent with CCP deciding that next expansion it's going to be faction warfare. That might be driving more players to at least take a look at what faction warfare is all about, part of their preparation as well, get a character in faction warfare for the expansion, and so we actually see a little bit of pressure on the price. At least that's my read on the Navy faction market here. I'm also awaiting the expansion to see what it's all about, what we can do, what the new ships will do, maybe try them, maybe try to build them. Who knows how all of that stuff will go, but I'm definitely eagerly awaiting any news on that. But I will also be honest, what I'm mostly looking forward to is that allegiance system, so that I can stay within my own corporation and alliance. I'm actually pretty proud of that, being a solo player, that I've got all of that stuff done. I want to fly my own colors and things like that, and still be able to take part in the content for the expansion. But we have to wait a little bit longer for that, unfortunately. Still, again, mass test next week. If you want to take part, definitely welcome. You just have to change the server on the launcher to CC and show up. Everything costs 100 ISK there, so you can fly really whatever you want. So it's always pretty fun. Takes about a little bit less than an hour. So there we go. That's it for this EVE Talk, guys. Thank you very much for watching, and as always, I'll see you next time.